All right, we are live, guys. Thank you, Simon Dixon, for being on the show, and thank you for taking the time. It's been a difficult time for you. I'm sorry to hear about the loss of your father. I also lost my father early when I was 22. It is hard, and that makes the effort that you're doing here even more appreciated. And thank you, Plan C, for linking us. So how are you? How are you, Simon?
Yeah, I just don't really know what day it is. I'm just waking up and getting on with the job at hand at the moment, trying to take some time out to honor my father. But actually, my father is watching me right now, and he was always most proud of me when I was, hard at work doing what I'm doing. So that's how I try and compute the two together. There's a disaster to work through, and that's when I really do my best work.
And if anyone against all odds doesn't know Simon, he's been one of the, I think, biggest heroes of this industry. That maybe the unsung hero, I told one of my friends just before. Simon has invested in Coinbase, Kraken, Bitstamp, Bitfinex, Celsius, and I think over 100 other companies. You wrote, I think, the first book ever to include Bitcoin. Before that, you tried to build a bank where people can truly, control their own money, and so on and so forth. So it's an enormous honor to have you here. And please introduce a little bit. Who are you?
Sure, yeah. So for those that don't know me, I've been at the mission of trying to unpack money for 2 decades. It's been my lifetime obsession since I started studying economics, mastered in economics, went into industry, worked in stockbroking, market making on the London Stock Exchange and corporate finance, taking companies public. Left in 2006 because I found it very soulless and not a big fan of speculation myself. Was more interested in the long-term investing of taking companies public and how people create something out of nothing that then ends up becoming a financial product that then goes through the cycle of banking and creates all these incredible things just from starting at an idea. So that's fascinated me. So I'm writing my third book at the moment. My first one was exposing the banking system for graduates that wanted to work in banking so they could actually make change from the inside. The second one, Bank to the Future, was called Protect Your Future Before Governments Go Bust. And that was helping people unpack the decade ahead. And it was the first published book to include Bitcoin that I wrote in 2000, was published in 2011. And that was the same year that I spoke at the first Bitcoin conference because I was pivoting my business from trying to create a bank where we were trying to do non-fractional reserve, for those not familiar. In the book, I talked about the problems with banking, and I was trying to create the opposite of what the problems with banking was. It turned out that it's impossible to do it in the existing legal framework. And after going completely broke, putting all my money into it, going deep in debt, found a Bitcoin. Actually, the way I got into it is a guy from the monetary reform movement. I was giving lots of lectures on money reform before the Bitcoin community came around, and he said that he'd sold his house. His name was Johnny Bitcoin. And put all of it into Bitcoin and moved into a squat in London with the first Bitcoin developers. So I was intrigued by that, spoke at the first Bitcoin conference, made my first investment at $3, and started investing in many of the companies, and built BnkToTheFuture.com, which is a regulated, it's the longest standing company in Bitcoin, and the first regulated securities business in crypto. And so through that, we've built a community that have invested in most of the major companies in this industry, which has put me in a bit of a unique position to be able to just see this industry in every single cycle, and work with companies on their disaster situations and support them in their growth phases.
And so if it cannot be missed by anyone here that Simon is a very long-term guy, and I think we will come back to that later in the episode. And we come into the Bitcoin blockchain space from two very different angles, even though we have the similar perspective here. I came more from a technology angle. I don't have an economic background. I'm a technology guy, and I actually had blockchain on my slides many years before I had any Bitcoin, because I realized the value of the technology to kind of secure the mutability of charging data records and so on. And only much later, in 2017, I started discovering the money aspect. But
so I'm a finance guy that got forced into technology, and you're a technology guy that got forced into finance.
Exactly, and it's fantastic how these blend. And I'm very happy that we're having this conversation, because I think we share a lot of perspectives. But at the same time, it's a very sad situation. I mean, same like you, Simon. I also had money in Celsius. I trusted them completely. But that is fine. If I lose them or not, it will not affect me in any way. But I feel very sad for the people who perhaps put a lot of money, or a lot of their money, or all of their money into Celsius, and right now they don't know what will happen. And that can be heartbreaking and a very difficult situation. And I feel very sad about that, I must say. I'm usually not so sad. I'm a very happy person, but I do feel sad about that. I wanted to try to contrast that. It's a beautiful sunny day here in Sweden. People are happy, and every morning life starts again. We have a new day, and we have a chance to start again. And I think that's important to keep in mind. No money is worth giving up for. So we don't know yet how this will end. I'm a positive person, but I still think that there are good chances that this will come to a resolution one way or another. And Simon, here you've worked extremely hard to try to create options, to try to create solutions that can help depositors and help the company, because you also have stocks, and of course that means that it's in your interest to see the future of the company as well. But before we go into the details, there are a few things that I think we should all keep in mind, and that is the long-term perspective. In 10 years, if I live and have my health, I'm still going to be here in this industry. I spent 20 years in the telecom industry or more than that. And Simon, you've already been in this industry for how long? 10 years, more than that even.
Just over a decade, yeah.
Over a decade. And you're clearly a long-term guy. So, in 10 years, if we live and have our health, we're still going to sit here and talk. And that is important to keep in mind, that we try to solve this in a way that continues building trust for the industry and for the people in our networks. That, I think, is perhaps the most important of all. And you had a position, or you have a position, and you've had a position for many years, where you are trusted by competing companies. And those of you who know me from before, I also have had that position. I also could talk about strategic, difficult questions with the competing CTOs, for example, for different mobile operators. And they all trusted me. And for 20 years, I honored that trust. I never leaked it. You talk about Chinese wall and so on. So I think that's an important perspective to take. And it's with that in mind, it's also to remember that Alex Mashinsky isn't here on the call to defend himself. So I think we should approach this from a direction of kindness. And I personally, I don't believe that Alex Mashinsky went to work with the intention of, taking anyone's money. Things go bad, and we see where we can take it from here. But I want to approach it from a direction of kindness, not with any agenda, just as a human being. And
okay, yeah.
then let's go into the details of Celsius. So if we back because I feel many times it's important to understand the history. Otherwise, we can't understand the present. And I think many of the issues, based on your previous interviews, started quite long ago. And then before the accounts closed, we all saw on social media that there almost was like a campaign against Celsius. There were people posting like, watch out, you should withdraw your money and so on. Did that create the bank run, do you think, or did the issues, was that the issue, or did the issues start earlier?
Okay, yeah, let's try and frame that. So, firstly, although I am very negative about some of the actions that Alec Mashinsky is currently taking, I do believe that this relates to our previous conversation. I'm a finance guy that found technology. You're a technology guy that found finance. And my company would be useless without people like you. And probably a company that you'd create in financial services like Celsius, if you were the founder, would be useless without people like me. And if I didn't co-found it with my wife, who is a genius in compliance and legals, and make sure that we don't, for years and years and years, I learned through, the types of things that you can say and can't say in order to not misrepresent things, that has led me to, kind of a way where people might be frustrated with the way that I'm speaking. It's not the best marketing, but it's all designed with people understanding what they're signing up for so that they can make the right financial decisions. Okay, so with that in mind, what happened with Celsius? Well, somebody that, Alex, that seems like a very accomplished entrepreneur and has had multiple success stories, applied the same skills to financial services. Now, there's a big challenge with financial services. There is a really, really, really big responsibility that comes with managing people's money. And when you are managing people's money, there is a certain level of investment in compliance, regulations, and systems that you need to go before you can move fast and break things. And it's just a different mindset to the startup world. And so in the startup world, you start with a vision and no one believes you and everyone's skeptical. So you have to campaign for why people should use your technology, and everyone's against you and everything's against you. And you have to push hard. And sometimes you have to paint your startup in the best way in order for people to use it. Then you get adoption. And then you start working on the things that make everything work. That's a normal, startup world. In financial services, there's big consequences. And this is why, coding smart contracts, you find people that are doing something, tinkering with technology, and then suddenly they've created something that becomes this massive financial beast. And Dogecoin's an example. It created as a joke, and suddenly this thing had billions of dollars of value. Somebody who's the CEO of one of with the largest followers, like Elon Musk, starts joking about it, and that causes ginormous financial loss for people in what just seemed like a joke coin, with someone making a joke on Twitter. And so it's a very strange industry. Okay, so with that in mind, I do not believe that Alex fully appreciated and understood the responsibility that comes with creating a multi-billion-dollar financial services company. And that is what went wrong with Celsius. And over time, it started as, a peer-to-peer model whereby somebody that had some Bitcoin wanted to not sell that Bitcoin. So they would take out $1 loan, and there'd be someone else that's willing to pay interest on that Bitcoin. And to manage the risk, you put some collateral down, over collateral. And as long as that collateral is good, and you have a good system and technology for automatically, taking out that collateral, then this is a much, much better system than unsecured loans or credit ratings, and it's a lot more inclusive. And it's a really good idea when you back it by sound money. And so I believe that Bitcoin is digital hard sound money, and one of the most amazing, incredible gifts the world has ever given us. Thank you, Satoshi Nakamoto. You've made a huge difference in the world. And so as a company grows, and high growth companies are very, very challenging to manage. But when you're dealing with technology and you go from from a billion to a few billion under management, and you go from 40 staff to 900 staff, that's a very, very problematic thing to manage. Mistakes are made, all sorts of things can go wrong. So what happened is I think this grew so fast, and he was so successful in his marketing that he also didn't have, he was an excellent framer in terms of giving someone a point of reference to understand how this is, but it also misled people into not understanding the risks. And when you don't understand the risks, you end up overexposing yourself to a risk that you don't understand. And to the point where it was framed so effectively that people took their retirement funds, their life savings out of a bank, converted it into a stable coin without appreciating the risk of a stable coin, and then gave it to this what felt like a low risk savings account. And it was targeted at those people with affiliate marketing, where they were getting their families in and everybody else in. And when you have affiliate marketing and referral marketing, they misrepresent things based upon a message that came from somebody that was misrepresenting something. And I've seen it time and time again. This is how you get these ginormous multi-billion-dollar, a lot of Ponzi schemes in our industry start with good intent. One thing leads to another. And in this case, I believe that Alex didn't realize that he'd suddenly created a high-risk fund with a bunch of people that did not understand the risks. And then certain things happen, hacks happen, mistakes happen. And then you end up in a situation where you may have made big risks on a very, very creditworthy large hedge fund that seemed like everyone else was lending to them. So there's a competitor. So you then do an unsecured loan. And then suddenly you might find yourself that you're an unlicensed bank, inadvertently, accidentally. And then you find yourself in a situation where if the market crashes and there's not enough good enough collateral, and then you also funded this company by a token, and all the community are telling you, what are we going to do to get this token more valuable, add more utility to it? And then you start using it as collateral, and then there's no liquidity, that you end up in the mess that Celsius found itself in. Then come along people that are, that are accused of, creating FUD or creating a bank run, that were essentially warning people that there is ginormous risk behind this thing. And by the way, risk is okay if you know you're investing in a high risk security, or you know that you're investing in a bank that doesn't have a lender of last resort or FDIC insurance. And you understand that you are investing in one's ability to manage that risk. When you came in without understanding any of that, you actually create a situation that ends with you committing mass fraud. And inadvertently, in order to try and save the company, you could end up going across lots of videos on YouTube. And if you misrepresent things to try and get more and more people to put money in order to try and save this situation, to not expose weaknesses, you could say that these people caused a bank run, or you could say that these people warned people of a risk that was misrepresented to many people, and to the detriment of all of the people that were trolling them afterwards. They essentially saved people from this thing becoming a lot bigger and causing a lot bigger financial loss, and exposing the weaknesses in the model so that everybody came out on the other side with experiential education, which sometimes experiential education in financial services means you lose your money. And that is very sad, but there's really two parts to that argument. if you over leveraged yourself and you were taking sell tokens and borrowing against that sell in order to buy more sell and then doing it with leverage trading, one could argue that that was just, poor risk management, your mistake. But if you were taking money out of a bank based upon the representation that this is just a safer way, backed by safer than banks and all sorts of marketing slogans that made you do that without understanding it, then unfortunately that may not necessarily be your fault. That's the fault of the person that made that representation, because they may not, and I can't really make excuses at a certain point, because there's one thing making a mistake, and then there's another having many people beating down the door and many lawyers and many professionals, saying these things need to be represented in different ways, and yet continuing to do that. So that is really the story of Celsius.
Yeah.
In terms of, did they cause the bank run? Yes, they caused a bank run, but a bank run, in effect, exposed some inherent major problems in the business that would have been exposed sooner or later. And the sooner you can expose those things, the less financial loss that will be for people.
Yeah, and we talked a few minutes before, and I feel that in this kind of disaster situations, sometimes it's helpful to think what good can come out of this. And you said the learning sometimes cost money. My late father had a word for it in Swedish is lär pengar. It means learn money. That's what it cost to kind of acquire the learning, because sometimes it requires that. And I mean, I didn't understand it. I didn't understand the risks, and I spend my full time on this. I spend almost the whole day of every day reading and learning about the blockchain industry. I interviewed Alex Mashinsky on the channel. I didn't have any inside information, but I tried to read everything there is to read. And I'm fairly knowledgeable, and I didn't get it. And then, how should someone who, is a casual observer of this industry understand the risk they took? That I think is almost impossible. And no, please go ahead.
And by the way, that is okay. That's called a black box hedge fund. And a black box hedge fund has to comply with securities laws and market themselves to people that are sufficiently suitable and qualified to invest in that product, or people that can afford to lose that money, and are sophisticated enough in order to know how to manage those risks. And if someone wants to invest in a black box hedge fund, then they're free to do so, as long as it meets all the regulatory requirements that are put in place in order to ensure that the investors are suitable, the disclosures are all made, and those risks are managed, and that's okay. But it's when you don't know what you're investing in, and you take that to the least likely people that are able to understand those risks and deliberately market to that segment of the community, telling them that you're standing up for them, then it starts to go a little bit beyond regulations and more towards ethics.
Yeah. And I mean, when I first heard it, the first time I heard about Celsius, it was a friend of mine, and my first reaction, it's too good to be true, can never happen. But then I thought more about it, and he also explained, and I felt that actually the business model do make sense, because as you explained, if someone has a lot of Bitcoin, perhaps they don't want to sell them. And if they do sell them, they realize capital gains tax, perhaps. So there could be a case for them to lend out the money, lend out the Bitcoin, get some other money back, and use that for whatever investment they want to do. And when they're done with that investment, they pay back the loan, and that can be worth quite a lot of money. And then the other people who lend, do the reverse, they can get some yield. So the lenders get some yield, and the borrowers can get the benefit of getting Bitcoin and use it for their investment. So I felt that, actually this makes sense, and that's a reasonable business model. Do you think that the business model exists, or did the business model never exist? Was it really, was there never a real business model?
So that I believe that business based upon pristine collateral totally exists. It exists in financial markets. There's nothing new here. If you've got some gold and you want to borrow against your gold, then you can do that. If you've got the mortgage market works that way essentially. The only difference is that there's the fiat currency Ponzi scheme behind it. But doing it on digital hard sound money makes sense as long as firstly you're doing it in a regulated environment. So you define what type of product it is, and then you accordingly and controls to manage those risks and disclose those risks. Um, and then you need a risk manager, and that risk management department needs to make sure that if you're going further and see once you're doing it with Bitcoin, Bitcoin is defined as volatile, and so you just need to manage the volatility risk with Bitcoin. Then you move a little bit further down the risk curve and you do a dollar-backed stablecoin. And you say, well, if it depegs, there's dollars, so you can just take the dollars out. Okay, so that's one level of risk. What's the likelihood of that stablecoin not being able to withdraw the dollars? Then you go slightly further down the risk curve and you say, well, there's proof of stake. There's Ethereum, which is switching from proof of work to proof of stake. Okay, so that's a lot more risky. There's lots of uncertainties. There's, staked ETH, and there's that transition, and there's all these weirdnesses. So, you're probably going to get, there's more risks to manage there. Then you start to go further down, and you go algorithmic stable coins. Okay, so that pegs, there's no dollars to take out. That's a problem, and that's what started to run essentially the algorithmic stablecoin. So now you're managing the volatility of Bitcoin, the transition from proof of work to proof of stake, whether the tether you can about those dollars, then the algorithm of whether this stablecoin is backed by what collateral is behind that. Oh, right, it's backed by a shitcoin from a central banker that's claiming it's decentralized. And then you're looking at representing to the world, oh, yeah, but by the way, we've got a huge balance sheet as a company. If it all goes wrong, we guarantee it. And saying statements like that, they mean things when you say that. And then you look at, well, what is that $2 billion? Oh, right, most of it was a token that's illiquid where you cannot easily realize that $2 billion. And then you start managing multiple coins. And then you start thinking, well, this coin's got this risk and that coin's got that risk. And then you start going further and further down the liquidity curve. And all of a sudden, you've got something that requires a team like long-term capital management that blew up the financial system through MBA, and the smartest algorithms in the world almost took down the entire financial system. And you end up with a situation like Lehman Brothers of 2007, where nobody understands inherently the risks behind these products. And your customers are all demanding, when are you going to add this coin? When are you going to add that coin? When are you going to add this? When are you going to do that? When are you going to make more utility for this token? When are you going to get it listed on this exchange? When's it going to? And then you've got the exchanges that are manipulating, this industry is wild, wild west. And then you've got completely inappropriate players that are making futures contracts on 100%. We recreated Lehman Brothers.
Yeah.
That's the situation.
That's very interesting to hear that analogy, actually. For me, it was when that news came that Celsius had withdrawn $500 million from the Anchor protocol. And I saw that news and I was like, what? I mean, I didn't dare to invest my money, my speculative, high-risk money in Anchor protocol with UST. I felt that that's too risky. I felt that 20% a yearly return isn't worth the risk. So I didn't put any of my money in that. I felt 20% isn't good enough. And suddenly I'm reading that Celsius had $500 million there. And maybe that was published the whole time. Perhaps I just hadn't seen it until they withdraw the money. And I realized that, but actually they're taking huge risk here. And they just escaped that crash just before. But then I felt that maybe next time they won't be so lucky. And that was really when it dawned to me that there is actually a quite high risk investment strategy going on here, not borrowing and lending for a yield for someone who doesn't want to sell their crypto to not realize, for example, capital gains tax, and rather push that into the future and have a loan instead. And when was the moment that you felt that this might be higher risk than we thought?
Yeah, so the history of is as somebody that has been investing in Bitcoin since 2011, I am a big believer in Bitcoin, and I've been investing the whole way up and invested in many of the companies that become multi-billion-dollar unicorns as well. I'm a risk manager, so I believe that I invest for things going wrong. And I invest in my beliefs, but I also prepare for being wrong in many scenarios. So that because I have gone in the situation, my father blew up all his wealth in the stock market. I bet everything on a business and it didn't work out, and I was broke. And I vowed never to be in that position again. So for 20 years, I've been figuring out how to manage risks, essentially, so that I can be in a position where no matter what happens, you're okay. But even under those circumstances, as I was explaining the situation with Celsius, nobody in the world is qualified to manage that many risks. The best team in the world. I've invested in exchanges, companies like Coinbase. They have like 3,000 staff to figure out, the types of things that are going on there, and so there isn't a team. So firstly, as you start moving down those risk curves, there isn't a team in the world that can manage those risks effectively. I've seen the pace at which my full-time job as creating an online investment platform is to have a team of people on the pulse with all these things. No one can keep up at all. The innovation and the pace of this is incredible. It moves at lightning speed. I've seen so many disasters, from Mount Gox to all sorts of things in between. And they move at a rapid pace. So you've got to really specialize in order to do this well. By keeping it back to basics and back to simple, I think there is a model there. So when we agreed to do, we pulled together a syndicate to do a funding round for Celsius in the Series A. It seemed like a fairly simple proposition. And the token wasn't really, like these things that came later, like buy and burns and things that make it have to comply with securities laws, and it wasn't deeply integrated into the business. So over time, the risks just started, growing, and the company just grew really, really fast. And so it seems like it was transitioning to being more like a security. And so we went and approached Celsius and said, start working on the regulations. And in the meantime, we've got a bunch of licenses. We'll create a securities law compliant version of this. And we started working on that project.
You even started beta. You developed it. Started beta testing something, right? What was that?
Yeah. I mean, we built a retirement plan that is sold in compliance with securities laws, that discloses all of the risks and manages the risks, whereby a percentage is put in cold storage, a percentage is put in custody, a percentage is lent for yield with the disclosure that you're putting your funds at risk. And then it goes between Bitcoin, Ethereum, and a stable coin that can be converted to dollars. And then a percentage is invested into equity, and the user sets those parameters based upon completing a financial plan and setting their financial goals and going through some sound wealth management principles from the traditional market. So we started to build that up. And we put together a wealth management program so that people were educated and could do this. And we started to put together an asset protection structure so that it could be done with tax deferral and risk management. and just a sound financial product based upon decades of experience in financial services in a regulated environment, where it complied with all of the requirements of a security. So we put that together. And then it wasn't until we started to say they started to secure some big funding, some very reputable investors, and so we were like, okay, well, we want to do the second funding round, and we entered into a due diligence phase. And this due diligence phase was just never completing. We were requesting information, and that information was just never in a position where we felt, okay, this is ready to offer to our investors. And we have to get that signed off by our US broker, which is registered with the SEC, and our regulator for offshore in Cayman Islands Monetary Authority. And then we were looking at UK regulations with an FCA signing it off as a financial promotion. And the whole time, Alex was like saying, yep, we're doing the funding round in 2 weeks. But we were like, no, you're miles away from providing everything we need. No, we're doing it in 2 weeks. And this just went on for 8 months. And then halfway through that, we just got to the final hurdle, which is regulatory disclosures and financial disclosures. And then that led to the event where Luna happened. The disaster started. We asked more questions about what was the financial loss as a result of that. And then more events happened. And we never got the information we needed. And then suddenly deposits were stopped.
Yeah. So what do you think?
I want to disclose in that whole time, and this is where a bit of ethical responsibility and systems and controls happen. At BnkToTheFuture, because we're regulated, we have to have a conflict of interest policy. So when I'm if I am an investor in Celsius and a depositor in Celsius, and other investors are doing that, then we have to log that as a conflict of interest. So when I gain access to certain information, I can't just readily pull my money from Celsius because I have an ethical duty of care to manage the conflict of interest. And if it later turns out that people made financial loss and I prevented myself making financial loss, then I'd be involved in something that could disqualify me as a director, that would prevent me, and that would cause big loss to our shareholders, because I would no longer be fit and proper to manage. And these are the types of processes that are in place when you're dealing with a financial services company that takes and no one cares on the way up, but when things go wrong, they really care, and they're the first to go out to regulators and put all the lawsuits out, and all of these things get unturfed. So I've just seen it too many times. I've been involved in the industry too many times, and I've just seen shenanigan after shenanigan. And don't get me wrong, of course I get things wrong. This is a fast-moving sector. I've made every mistake under the sun. But when this turns into a multi-billion-dollar essentially high-risk hedge fund that everybody thought was a low-risk saving account, you've got a major problem. And that is when I went public on Twitter after giving several plans, telling them, do this. From experience, I've done this a few times. Here's what you need to do. When it didn't get done, and I said, okay, we'll do it for you. You got to fix this. When that didn't get done, I had to just go out and tell the community, there's things you need to know here. I had to make the choice, which is very difficult for me. I'm not a very confrontational person, but I've been very confrontational in this situation. Because I realized that we found ourselves in a position where a lot of people were going to make a lot of financial loss as a result of Alex still being the CEO. And that was really difficult for me. When I realized that the solution to depositors was to get the people that the depositors love the most out of the way. And that became something that caused an immense amount of challenges for me on Twitter and social media, and attacks on me, and all sorts of stuff, because Alex was like family many people.
Yeah, absolutely. I mean, I sometimes said that he's the only person in this industry I trust, and that I'll have to eat up. And let's do like this. Let's take 10 minutes on what are the paths forward, and what do you think are the probability or chances of depositors getting their funds back in each of those paths forward? Because that's really all I care about at this point. So I wish that the people who put in their money get their money back. I feel everything else is secondary. And what are the paths forward, and what is the probability that people get their money back, do you think?
Okay, so firstly, when I first reached out with a solution, I told Alex, here's what I did with Bitfinex, and I gave him a timeline of how we solved them having a major disaster, and turning it into an opportunity where those that were affected by the disaster ended up with an incredible investment and gain for taking the risk that they had to take in order to fix it. So I don't want to go too deep into that. If you want to find out how that worked, just search Bitfinex hack recovery, and we created and explained a video after on how it worked. I explained and I said, but you have to communicate, you have to be transparent, and you have to disclose the financial position. If you want to know a company that's doing that well, look at Voyager right now. Same disaster, very different reaction. Effective communication, disclosure on the problem, and get on with the process of fixing it as fast as possible before everything's damaged. So that was given. That didn't happen. And so the solution initially was, okay, it's an illiquidity issue. Stop withdrawals, communicate effectively, and tell people this is how long it's going to take to get your funds back. And everyone would patiently wait, call you a scam, get pissed off, tweet you, but then they join your team once they realize that something went wrong. And everyone's trying to get their deposits back. I believe that, and if that was the case, then Celsius could have recovered their brand. I've seen companies recover their brand. Alex could have carried on his AMAs every week saying, here's what's happened. We're on the same team. I'm really sorry. We didn't forecast this. This is what's happened. This is what we're trying to do. And that would have been an effective strategy if there wasn't something that you need to hide that could lead to you going to prison. That's my first thing that I was saying. And so that's solution one. I believe right now, based upon the actions I've seen, there is 0% chance that this is just illiquid. And illiquid means that you've got the funds, you just can't access them. There's 0% chance of recovering the brand, and there's 0% chance that Alex will be able to run the company as a regulated financial institution in the future. So that was first solution. The second solution was I put together everyone in the industry, all the investors, figured out whether they could plug a liquidity gap. And so I went out to all of the investors that I knew, and I said, I'd be willing to invest this amount. Would you be willing to invest with me? Here's a couple of scenarios. And they all said, well, what's the regulatory risk and what's the financial hole? That information was not provided, and therefore there were things that were being hidden, so no investor could analyze the risk. So solution two that we put to go went out the window, then it finally moved to solution three.
You raised $6 billion of commitment, wasn't it? That was in that solution number two.
Yeah, I had up to $6 billion of liquidity based upon understanding the risk and the terms. And it could be done with a combination of debt and equity. And so that was solution two. But unfortunately, this is when I realized that Depositors and Alex Mashinsky were not on the same team, because these were good solutions. And so the only reason you wouldn't pursue those is because there's something else going on that was making you not on the same team. So then I went public and did the Depositors First campaign. I realized that there's a few things. That if there is a big problem, assets are being sold off without shareholder approval or marketed to be sold in order to hide information in the main business. That's a problem. That's a real big problem. And then depositors' money is being used for things that they may not have opted in the terms and conditions. That's a problem. Side contracts are being written with people that I knew in order to try and cover up certain things to lend money in order to solve. That's another problem. And then I realized, okay, what is the worst crime here? And so I tried to educate people on these things, and said there's only one solution here. The one solution is get to the position where people know what the size of the hole is, what coins do they have, and once we know what coins they have, decide how much the haircut is. If you've got a Bitcoin and Celsius can only pay you half a Bitcoin, then you've got a 50% haircut on that Bitcoin. And then you need to essentially perform a technique that's used with distressed banks, which is a bail-in. Or you could do a bailout, not a government bailout, but a free market bailout. And so that was solution 2. And a bail-in is where you replace the equity. Now, what the problem is that giving people as in companies what a distressed bank does during a bail-in means that you have to have a future for that equity. And so I said there's 2 things that need to happen for there to be a future of that equity. A few things that need to happen. Firstly, based upon the actions that have happened over the last few weeks, I believe there's a 0% chance of recovering the Celsius brand. Based upon the actions that I've seen over the last few weeks, there's 0% chance that we'll ever hear from Alex Mashinsky ever again. Or he will be licensed by a regulator and pass all the fit and proper tests in a timely fashion and secure all the licenses to reopen the doors again. There's there's a 0%. So there's a 0% chance that 100% of the funds are there. And when I told that, people hated it. And so we started to put together a approach, which is, what is the future of the equity? Well, we put together a bunch of companies, an M&A structure that could immediately have all of the licenses needed by all people that were already fit and proper in order to manage that process, and put together a compelling vision with somebody that had a track record, i.e. myself, of being able to execute a very compelling business plan for that equity, and all of the depositors that had suffered financial loss could become shareholders in that company. What I started to realize, I got 2 pushbacks, and then we'll go to your question. The pushback was the information needed was not going to be provided. So I took an opinion that it had to go into Chapter 11 in order to force the disclosures that are required in order to put together that plan, because the board wasn't going to put together that plan. And secondly, I got pushback of being a hostile predator, vulture, that's looking to come along and has wet dreams about being the CEO of Celsius.
Exactly. So I'm going to ask a few hard-hitting questions and summarize them in groups. One is really what you just said, that what you say to the people who say that no, but Alex is probably trying to sort it out right now, and he will come back and have sorted it out, and you're just trying to do a hostile takeover. So that's one objection. What do you say to them?
I say that the future will judge that, and if that is the case, it's going to be transparent. And I spent 2 decades building a reputation, and a decade building being somebody that's trusted by all the companies in this industry to act with integrity. And if it turns out that way, then all of the companies that I've invested in are probably not going to trust me with the same level. And I just put my whole reputation on the line because I reached a level of certainty that I believed that we were in an Alex Mashinsky versus Depositors scenario. And in order to have a chance for Depositors, when I was receiving direct messages of people that were considering suicide, that were thinking that their life is over, that I had to look inside my heart and decide what is the best way to do this. I know that my reputation is going to be fine after this. If I have to put my hands up and it turns out I'm completely wrong, that will have some damage, but I'll do that, but I'm just certain I'm not.
Yeah, that's thank you for answering that so open-heartedly. And the second objection group is really about like, if you want to solve this, why trying to do it from the outside? Why not join the board, work with board and Alex Mashinsky and everyone to try to sort it out from the inside? Why do this from the outside like this?
Yeah, so most people are involved when a company is involved in things that could be unlicensed, fraudulent, bad behavior. Most directors are trying to figure out how to get out, not in. Firstly, and that's why the board has changed so many times in this process. I have I have a duty to my shareholders, and if I joined a company and signed an NDA that silenced me, I would be in a deep conflict of interest that would be extremely challenging. And this is why I didn't move any money. This is why I didn't touch, when I knew I was communicating about this, I didn't buy, sell, trade, short, anything. And everyone was asking me to. They're saying, why don't you put all your money into sell token and all sorts of stuff? And I was like, yeah, if you want me to be taken down for fraud and then you got another problem, then I'll do that. But I then took the opinion that actually this is where it hurt me a lot. Me knowing what I know, and there's only two ways of interpreting it, either ignorance or unethics. If I knew that there were wrongdoing in my company and I asked somebody that ran a regulated company, I know that they're going to lose their position for their own company. It's going to destroy that company. And so either he didn't know that, and so it's ignorance, or he didn't care. And at that stage, that hurt me because he was getting advisors. And then I realized, looking back at previous actions, he was willing to take me down with him. And that's when I realized that this is a very hostile situation. So if I had joined the board, I would have been shut up, so I couldn't communicate. I would have been caught up in all sorts of lawsuits and fraud cases, and all of my BnkToTheFuture shareholders would be suing me for making really bad decisions that would have destroyed the value of their shares. That's just not a good move. And I wouldn't be able to execute an effective strategy because I can't vote on my own position, which I believe to be the best position. And I wouldn't be able to give any of the education that I'm doing on channels like this so that people can understand, oh, maybe I need to start seeking legal advice. Maybe I need to start thinking about what I do with my tokens. Maybe I need to start thinking about the position of my shares. Maybe I need to start thinking about how I manage my finances and start thinking about what levels of loss. I took the opinion that I could give education and at least move the conversation forward so people could make more effective plans from here.
Thank you for that excellent answer. Also, that settles it for me. So, if we take one key question, what all things considered, if you're like an outsider, what do you think are the chances that people will get some or all of their funds back, or is it hopeless at this point?
No, I've done this before, and I don't want to put out the world on my shoulders, but I did hire a world-class team that have done this before. And the answer is we've made incredible investment opportunities out of disasters before. And our ethos is that we involve all those that were financially harmed in the recovery. So if you look at, for example, the BlockFi situation, FTX is going to get all the benefits from the situation. When we were looking at working with BlockFi, we were putting together a plan where everybody gets the benefits to it, so is there going to be potential financial loss? Of course, it's increased the risk of getting returns, but with increased risk means that you have the ability to get increased returns. And so there is a solution. And the only thing that's needed in order to plan an effective solution, because we've got liquidity, we've got investors, we've got licenses, we've got brand, we've got reputation, and we've got an advocate that happens to have just spent the last 2 decades building trust with everyone that's needed in order to make something of this opportunity. And the willingness to do it, because I happen to have tens of millions in deposits that I'd like back, or I'd like to continue investing, and shares the last valuation and were worth 170 millions, are now a following in the community from people that are deeply skeptical, but I can continue to communicate until they decide whether I'm a fraudster or got their right minds in.
This sounds so obvious. Like, of course we should do this. Of course we should ideally have asked that to Alex, but now we can't. Why do you think he hesitates? Like, genuinely, why? I mean, this sounds so good.
It comes down to one thing, and this is where I hate kicking someone when they're down. But when I realized it was Depositors versus Alex Mazinski, I needed to disclose the information that I thought people needed to know. Just need the finances. Once the finances are disclosed, it will point out the size of the hole. And once the size of the hole is known, there will be most likely some fraudulent activity that somebody's going to get massive consequences for. Once those finances, just look at what Voyager did. Finances disclosed, NDA signed with people that can put together an effective plan, and they're halfway through that plan already, and we've never heard anything from that. Move into Chapter 11, we have to do what we did with Mt. Gox. We need to lobby the industry to ensure that they don't create the worst case scenario, which is selling off all the crypto assets, creating cascading liquidations, ending up with some dollars, realizing that Cell token is an unlicensed security, all of the exchanges delisting it, all of the disasters that can come. We can lobby that. And how do you lobby that? By the community knowing that there is a much better result for depositors, which is when I realized I'm now a politician doing a political campaign, which is looking like I'm a vulture trying to take over a company. But the truth will be told. This will all come out in the history. I haven't deleted one tweet. I haven't made any financial moves. And if this goes to court, because it will, there's going to be lots of lawsuits. There's going to be all sorts of stuff. I can say with a straight face that I went on your show and I've acted with integrity, and I've got 2 decades of experience to know the things that you shouldn't do to get yourself in trouble. So the answer to that question is we just need the finances, then there's a plan. The only thing stopping the finances right now is one person. And I believe that one person is trying to hide some things, that he is looking after himself, his family, his children, and what all his lawyers would be telling him to do in order to protect his interests.
Oh, thanks for that. So if we park the immediate disaster, we try to look forward. We think 5-10 years into the future, because more than a potential rescue solution for Celsius, you are being a leader of this industry for over a decade now, and I'm convinced that you will continue to be for another decade or two. Time moves fast, and big things are happening in this industry. I live in EU. EU just introduced a lot of new regulation, where some of them good, some of them I think not good. For example, they want to introduce a register, central register, where you put your wallet address and your name and home address in a giant database. And you and I realize that eventually that database will leak from some government agencies. Impossible to keep something like that from not leaking, and then there will be a global database with home addresses for with exactly how much Bitcoin or Ethereum or USDT or USDC someone has in their wallet. And I think that will give birth to crime, unfortunately, instead of preventing crime. And we have also learnings from us as investors. I try to educate on this channel. I have one episode in my course that I call "Don't Crash into an Iceberg, Not Even Once," because the boat still sinks even if you only do it once. And I think there are learnings maybe from the Celsius disaster. I would like to ask two questions. What are your personal learnings from this whole Celsius debacle? And what are the key learnings, in your opinion, that everyone should take with them from this episode, this disaster? Yeah.
Okay, so yeah, there are two questions. What are the learnings? Pristine collateral. So Bitcoin is pristine collateral, so then you just need to manage volatility. And a stable coin that can be converted into dollars is pristine collateral, as long as you can manage the risks of making sure you can get those dollars if it decouples. If all you did was that, you could rebuild the entire financial system on digital hard sound money. And so before this, in February, I was in El Salvador with President Bukele, putting together, how Latin America can build out a competing, based upon all of the countries putting in Bitcoin as legal tender and rebuilding bond markets backed upon Bitcoin. In 2014, we launched the first Bitcoin-backed bond in Iceland that was backed by volcano geothermal power. It paid out thousands of Bitcoin that made many of our investors incredibly wealthy. We did the same with Ethereum as well, and got people in under $1. And so we've got a lot of experience in creating securities, and now it's happening at the sovereign level. And so, before all this, I was 200,000 words into my next book, which is written for individuals, companies, and countries on a step-by-step process of how they can, use the fact that we now have digital hard sound money with Bitcoin. Get back to simple basics. And we were applying for our Bitcoin investment banking licenses in order to serve countries that now want to restructure their debt. If you want to think really big, I believe that at the moment, look at the large geopolitics. You've got China that's going to be creating and pushing central bank digital currencies. They're the next empire. The US is a debt-based Ponzi scheme that has the strongest dollar, but there is a change in empire coming. You've got these big geopolitical trends. You've got, the Bank of England, the Federal Reserve, has essentially said the dollar is confiscated from Russia. They're going to use that in order to put together a restructuring plan for Ukraine. Ukraine could actually rebuild their economy on digital hard sound money using some of the structures that we're working with countries for in Latin America. This is actually an opportunity to take the fiat-based Ponzi scheme that is going through a hyperinflationary cycle and give people an exit from traditional financial system. And this is where it pains me a little bit about the Celsius situation, because the philosophies that Alex preached were true. Do good, do well, whatever it is. These are principles I lived off. The banks are not your friends. I've been sharing these things for 2 decades now and writing books on the subject. We are alive at the most interesting and exciting time in financial history. The problem is, it's going to be incredibly painful for some and really amazing for others. This is a big wealth redistribution. This is David beats Goliath. This is countries in Latin America that have been shafted by the IMF, that are going through hyperinflationary destructive cycles, that can now rebuild their economy based upon Bitcoin investment banking and financial products that have transparency, that can't be confiscated, that can have auditability. And at the end of this geopolitical disaster between NATO and Russia that's going to escalate to China will be the next monetary renegotiation. And we've had several monetary renegotiations. Bretton Woods, and I started giving content on, Bretton Woods 2 and Bretton Woods 3. We have an incredible opportunity to rebuild the financial system based upon digital hard sound money. I will never give up on that mission, and I will fight till the end. And we have an incredible amount of cycles in between of all these different things, but we recover from them all. And we've had this, we've seen this before. Everyone forgets about the regulations. Everyone gets confused about the DeFi, and then people slap a little decentralized sticker on top of it, and then you realize it's recreated a central bank. And these innovation cycles, this is an incredibly exciting time. You just got to be doing things like listening to CTO Larsson around, risk management, asset allocation, manage the risk, back to principles. I was taught that shit in my original financial planning certificate that I did over 15 years ago. Really basic stuff applied to this. And never be exposed to one scenario. And so one of the things I did is I created a video series, retirementplanb.com. And I literally said, here's how I'm investing for the Great Depression of the 2020s. And here's how I'm managing the risks of wars, pandemics, inflation, deflation, economic growth, economic decline, bank failures, Bitcoin failures, and everything in between. And everybody, here's my final word, and sorry I've gone on a rant. I tend to do these things.
No, it's good, yeah.
People, I'll just give that one final phrase. People completely overestimate what they can do in 1 year and underestimate what they can achieve in 10 years. Put together a 10-year plan, and you were involved in one of the highest performing asset classes in history at the grounds of it. And if your wealth has been destroyed, learn from that mistake, continue, get up, rebuild, and you are a wiser person. Each cycle wipes out people, and you've got all this experience behind you, and an internet and websites and videos and YouTubes and people that are willing to give you the information that when my father blew up, he couldn't access this information. There was no YouTube there. This wasn't available. You'd have to work at the top ranks of an investment bank and be connected to the highest hedge fund manager in the world to get what's available for you for free today. That's exciting. Rebuild, get up. We are at a very exciting time. This is your education. It's never worth thinking that this is a time to go down and out. There's a lot of people that need your help. There's a lot of people that don't know this stuff, that are in hyperinflationary cycles, that are rioting and burning down presidents' buildings right now because they don't have access to the information and financial services that you have access to. That's exciting. That's an incredible opportunity. And let's make the most of this.
Exactly, because it's great that you say that, because that's one of the things that I always say, that people overestimate what you can do in 1 year, but underestimate how far they can come in 10 years. And also we tend to overestimate the speed of change, but we underestimate the magnitude of change, right? It feels like it should happen quickly, and when it doesn't, it seems like nothing happened, but it does happen. It just takes very, very long time. But then when it happens, the change is much bigger than we could ever have imagined. And I mean, I had the privilege to be part of the telecom revolution, which really gave information and communication in the hands of everyone on the planet. There is no one in the world who can't afford a mobile phone today. People, it's on a similar need level as food. Communication is as important to us humans as food. So we tend to still prioritize communication if needed with our family and friends and so on. And when we started that, no one could imagine that we would take this from something that only very rich stockbrokers could afford to every, the poor people in a slum in India can also afford a mobile phone, and that is incredible. And now I feel that we're on the ground floor of doing that with financial inclusion. It's happening again, and we're just in the beginning. Many people feel like, this is the end. Like you said, that you have lost the money, so now it's over. But it's not over. We're just, you and I, realizing that we're just in the beginning, even though the numbers are big in terms of market caps and all that and so on. But in terms of people who actually use it, we're just in the beginning. The technology, the industry, the ecosystem is in the beginning. We're finding our way. We're struggling. We're stumbling as an industry. We're screwing up, and as a blockchain industry as a whole, if we all take responsibility for the industry, but we will move forward. And I feel that the same thing will happen again. We will have everyone financially included in the end. Everyone will be able to have apps on their phone that actually gives them access to the same type of financial services that only privileged people such as you and me have access to today. But in the future, they will all have it. And that's also what I was so attracted with Celsius message. I felt that that was kind of part of that journey. But I do think that we will get there, even though we stumble here. But as you say, I think it's important not give up. We need to learn from, if we lost all the money, okay, time to make new money then. And we need to, maybe we get maybe we get it back, maybe we don't, but we're still in the beginning of the industry. And having access to a loan market isn't just something for rich investor people like us here on the channel. It's important for a poor person living in a poor country, but because maybe if they can get a loan, they can buy a sewing machine or something, and they can start a business. And I feel that all these things will be enabled by the blockchain. And it's interesting, the El Salvador, the work they've done in El Salvador. If they can survive this period where Bitcoin has gone in a straight line down in price almost since they started, imagine how successful this will be in a future uptrend. And I heard that it was still popular, even though they've had the worst possible timing in terms of Bitcoin price, which I'm sure is affecting the perception. But I think
yeah, again, this is a classic. At BnkToTheFuture, we have 150,000 investors that have become incredibly wealthy by investing long term over a decade-long period. I have seen this time and time again. You are since being involved in this industry, when the market goes down, I've been mocked, I've been called an idiot, I've been told that I'm deluded, and that's exactly what's happening to El Salvador right now. And you have Bitcoin habituaries, Bitcoin's dead, told you it was a scam. All of that happens in the downward market. And that is when I do the most investing. I invest in a bull and bear market. I know you've got different thoughts on timing, but my personal strategy is I have a full-time job to do. So therefore, I have to get a simple strategy and just set it up to automate and carry on. And it served me well. But El Salvador, it will get all the mocking right now. But in the bull markets, they all look like geniuses. I remember when Tim Draper bought like 30,000 Bitcoin from Silk Road, the auctions from the FBI, and then it crashed down from like $600 to about $200, and everyone was saying, what a crazy person. I went on CNBC when I was being roasted. Look up Simon Dixon, CNBC. I was telling people, and they were saying, Bitcoin's crashed to $300 and, all this type of stuff. It's just short-term trends. It's just really, really simple. The demand for money you can own, money you can spend, and money that has a fixed supply, the world is giving more and more reasons why people should want to do that. And that is the foundation of this entire thing. Digital, hard, sound money is an innovation and an opportunity that can have, it's just simple. That alone, just understanding that and having a long-term perspective means that El Salvador is going to do incredibly well in the future. And David is going to beat Goliath. And the countries that were fucked over by the IMF the most are going to be the ones that are going to structure the investment banks that are going to create competing interests to those that are having predatory dollars, dollar loans by the IMF. And those, by the way, are the most unethical loans you will have ever seen, because they didn't have that money. They created that money out of thin air, and they have the privilege of creating it And that's why in my book, I've been trying to help people understand following the money for about 5,000 years of history to make sense of all the things that are happening today.
Exactly. And isn't it amazing? Like when everyone talks about inclusiveness, we should welcome and include everyone in society and so on and so forth. But then comes Bitcoin, then comes blockchain along, which actually for the first time is inclusive. Everyone can do the same thing. Everyone can log in, download some wallet, do some action, and everyone is the same. It doesn't matter how old you are, what country you live in, the color of your skin, your gender, if you have money before or not, doesn't matter. Everyone can do the same thing. It is truly inclusive for the first time. And what happens then?
And this
then
is where our
they
work,
don't
this
like
is where our
it.
work ties together, because you were working on mobile adoption and the technology that makes that possible. And now Bitcoin's created that. So it's not available for everyone because you need to get the mobile technology and you need to get the internet available for everybody. And that is the important work that makes this possible for everybody. So this is a continuation, and these technologies and merge into each other. And we're at that stage now.
Exactly. But then look at how the most politicians, how the IMF and so on reacts. When something comes along that is truly inclusive, then they don't like it. No, that we have to stop. We didn't mean inclusive like that. Not for them. It was supposed to be inclusive for us only, but not for those other people. That was never the intention. And then, try to stop it, try to crack down, try to come with different threats that you don't, you cannot, you need to repay your loans if you continue doing this inclusiveness and so on. I think it's horrible. And I want to stand up and we...
Can I close on one bit of politics that's happening currently in the UK that everyone could be involved in an interesting scenario? So I don't live in the UK, but I started building my business in the UK, and I met Boris Johnson to try and bring Bitcoin to the UK. And Boris Johnson actually plagiarized our brand and created a campaign called Bus to the Future, and then invested government money in our competition that wasn't using Bitcoin in order to try and push forward investing in British businesses. So I found him a deeply unethical character at that when my experiences from him. But now he's actually been had to retire because of his ethics. At the same time, in 2014, I came to the island that's behind me, the Isle of Man, that was the first country to make Bitcoin legal tender. And when they announced that they were going to do that in 2014, I came down and presented and gave them a vision. And the Bank of England blocked it. And so the regulators chucked us out of UK because of the Bitcoin side of it. Boris Johnson, plagiarized the brand and funded our competition to get us out. The Isle of Man then said, we'll have you. And the Bank of England then said, if you support the Bitcoin industry, we'll remove clearing to your banking system, which Ireland depends upon. Then we essentially had to find a regulator that would support our country. Now, here's where it comes full circle. Very, very interesting time. Before Bitcoin was created, and there was a presentation in 2014, one of my last presentations in the UK before leaving, a monetary reformer called Steve Baker, who's now a member of parliament, an Austrian economist that was a big supporter of Bitcoin and some of the monetary reform. The only politician, the only MP that I know in the entire history of dealing with the MPs that are behind the banking system that have zero clue about money. He's the only one I know that has that really good switched on. He's somebody that I would love to be the next president of the UK. Now, competing for that is a gentleman called Rishi Sunak, ex-Goldman Sachs, who was involved in all sorts of tax problems threw Boris Johnson under the bus and the same things as well when it got too bad. But he has been pushing the G7 meetings for central bank digital currencies. And so he's tried to get the whole central bank digital currency movement moving in order to build what I consider to be communism on a blockchain. Really interesting time. Boris Johnson has now stepped down and had to retire. Steve Baker, the only MP that understands Bitcoin and money, and Rishi Sunak, ex-Goldman Sachs, that is likely to be the next prime minister. Wouldn't it be interesting if us as a Bitcoin community could make Steve Baker the next prime minister, and then we could take a restructured Celsius, build an investment bank on the Isle of Man that supported across Latin America the foundation of the Bitcoin sovereign debt model based upon digital hard sound money and a movement towards legal tender, and gave it independence from the Bank of England. That's the type of shit that I'm excited about. And yes, I'm a deluded visionary, but we can do this. And this is the type of movements that are happening if we can, restructure these companies and really have an impact in the world like we've never seen before. And I will continue fighting till the end. And in these disaster scenarios, maybe, just maybe, we were meant to create the thing that changed the financial system forever in a time of destruction when everyone is suffering a cost of living and hyperinflationary cycle and wars and geopolitics and central bank digital currencies. Maybe we were meant to create an exit from the traditional financial system, and maybe we were meant to have the products that could save countries in their moment of redevelopment. That's exciting.
Yeah, I mean, when there is a disaster and it feels like nothing good can possibly come out of this. But then in the end, when looking back on our lives, often it is exactly those types of moments that created the change that in the end drives everything. I think if there hadn't been a financial crisis in 2008, maybe there would never have been a Bitcoin, for example. So, I mean, wouldn't that be an amazing turnaround if the disaster of Celsius kind of turns into first step of creating, a new world almost that kind of lives upon this ethos of more inclusiveness, financial inclusiveness, and sound money. And I mean, the CBDC discussions, I mean, we all read them on Twitter, but it was horrible when we have key leading people putting in writing that, yeah, maybe it would be a good idea that CBDCs can only be used to buy things that the EU Central Bank deems beneficial, deems appropriate. And I'm sure that they had in mind then, maybe they were thinking, you shouldn't buy illegal things or something like that. But it's going to also mean in the end that you can't buy anything that's disruptive. And me, who have worked my whole life with innovation and disruption, is always unpopular in the beginning. It's always people don't like it. That's the definition of disruption, and that is what innovation is. You try to do something in a different way. And we humans generally don't like change. We want preferably tomorrow to be pretty similar to yesterday. And if someone comes and says that, no, we're going to disrupt it, we're going to change it completely, we humans don't like that. So we don't like innovation until much later when we see, yeah, actually that was pretty good. But most people work like that. And if we kind of get this kind of horrible restrictions that only what is woke today or only what is good today can be bought, then every disruptor will be shut down. Every innovator, like the Steve Jobs of the future and so on, they can never even get started with their business because they will do something that isn't considered good. You're going to disrupt the music industry like that. No, but we have our CD sales records over here. That is very important. Or I mean, it's always going to be like that. And I feel it's a horrible dystopian future for our children to grow up in.
Let's turn this moment that we are in right now into something incredible. Now, imagine if everyone that's affected by this, we end up using blockchain technology or some just straightforward Chapter 11 restructuring in order to implement a bail-in for the distressed lenders, combine that with all of the licenses that we have, combine that with a vision and all of the contacts we've got with all of the different countries that are looking to implement Bitcoin as legal tender and restructure their countries based upon, let's give them a really compelling proposition that actually, helps them in pay off their IMF debts or whatever. Let's get really big thinking here. These trends are there. Now, imagine if we created that whole thing through a disaster bail-in, and everyone that had this disaster and suffered this financial anxiety became equity holders in that. Us as an industry, we could do this all together. And we can do it with the correct compliance. We can do it with the correct regulations, because the central bank digital currencies, the banks are not your friends. These phrases were true. They're going to come after us. And remember, they are going to come after us. And we've got to make sure that we get the compliance right and the regulations right, because the type of shit that's happening just makes our industry look bad. It doesn't help, because we've got big enough fights to battle. Let's get things right. Let's do things right. Let's do this together. Let's turn all of this. Let's restructure this. Let's turn this disaster into something that the world can use, and we can do that. And I'm excited. I like having conversations with people like you, because these are the types of productive conversations that we can turn from disaster when we act as a community and we challenge each other with new ideas. And literally, that's just coming from being on this show. So thanks for inviting me.
Exactly. And I think that if I can leave with one word, that is really that we are in the beginning. Celsius seems huge, right? They have 1 million or 2 million people using it. It feels like it's enormous. But when I worked in telecom industry, when we did what we call like first office application, it's like a trial. We do a trial of the new version. Maybe we do that with an operator that has 100 million subscribers. So that's the test. The test run is on 100 million. And then after that, we roll it out into the billions of users. And here we're talking about maybe 1 or 2 million. It's a factor 1,000. There's like 999 left. And we are in the beginning. And if we can find a way to turn this incredible technology, merge it with the regulation so that it becomes passable for the governments, EU, UK, US, everywhere in the world. And we kind of combine it and really bring the financial inclusiveness, because technically this can be done. It's an app on the phone. We've already deployed the phones. Everyone already have the internet and the phones. It's just an app. And if we can just package this, I am certain when we look back, it's going to take 10 or 20 years. It's not going to happen 2023 or 2024. It's going to take a long time to bring everyone on the board. But I am convinced that it will happen. Blockchain and Bitcoin and this technology, that will have as big impact on society and on everyone's life as internet and communication had. This is really the next step. I've never been so sure in my life. We just need to get through these speed bumps, and to each individual who is here listening today, don't give up, even if this has been a setback, because we are still in the beginning. And I personally still have good hopes that one way or another, this Celsius situation is going to resolve, hopefully with your help, or whatever way that people get their deposits back. I really hope so, and I'm an optimist.
Yeah.
And
I'll just end with a few things that people can do then. Firstly as well, even if that doesn't happen, Bitcoin still survives. And we still have Bitcoin. And Bitcoin and all the on-chain things that are coming in the pipeline that we're investing in right now are absolutely incredible to do that. So, that still exists. The price doesn't matter. We still have digital hard sound money. Okay, so even if whatever we do on the centralized side, if you want to submit any ideas, if you're affected by any of these things, then we created a webpage, BnkToTheFuture.com/Celsius. You can disclose whether you're a depositor, shareholder, token holder, and submit any ideas, employees maybe. So you can do that. I'm pretty frantic on Twitter right now. I'm not normally this involved in Twitter, but if you've got questions for me, this is the most engaged I've ever been on Twitter. So it's at Simon Dixon Twit TWITT. Also, if you want to know how to rebuild, I know CTO Larsson, you've got some resources that you can share after this. But on retirementplanb.com/book, you can have a free copy PDF of the first published book in the world to include Bitcoin, a 4-part video series on exactly how I invest, and also all of my emergency broadcasts. If you want to understand the big macro trends like central bank digital currencies and what's happening in El Salvador and IMF, things that are happening, those big trends, that's all for free. Take it as your education, and check out some of the stuff that you guys that you put together, because I know you've got a slightly different way of doing things. If you want to be more proactive and more involved, is my understanding.
Yeah, absolutely. I think what I want to help with people with is basically not lose all their money, because if coming into this industry with no education, no own methodology or process, just going on social media, checking what people write on Twitter, most people lose money. That's a fact. They buy when the hype is at the maximum, because that's when everyone feels the most enthusiastic, and then they buy, then they hold all the way down. Then at the bottom, everyone is the most depressed, and then they sell to basically, even if there's not much money left, they still sell the 1% that's left, or 15% that's left, to end the pain, sort of. And that's probably the bottom. So if coming into this because I did a lot of those mistakes through my career before I started, taking this seriously. I did those mistakes. I bought the hype top and sold the depression bottom, and then repeated it. And I just want to make people realize that this is something you need to have a methodology. And there are many great methodologies that work, but you need to have some process, which isn't just doing what people say on Twitter, because that's probably will systematically not work.
Yeah.
So that's
I'd love to carry on talking, but I got
we're half an hour over time. Thank you so much for this, and we have a lot of reasons to continue talking over the coming decades.
Yeah, and I just want to thank you for inspiring, great thoughts live on these shows, and taking me from, sometimes it's been an emotional roller coaster. Sometimes I'm in a place of defensiveness, but solutions are coming here, so there is a good future. So thank you all for inspiring me to do my best work. Thank you.
Thank you, Simon, and we speak soon again. Bye.
Bye-bye.